Welcome back to the Digital Ledger Monthly Update, your monthly guide to the biggest shifts shaping corporate finance and accounting. I'm DJ, and joining me, as always, is our resident expert, CJ. And CJ, November 2025 was something else. We saw massive shifts in technology, politics, and the global economy all collide at once.
It really was a month of huge transition. For professionals in our field, the need for agility and honestly serious upskilling has never been clearer. We watched major legislative battles play out over accounting standards, and we saw huge corporate strategy pivots driven by the rush of AI investment.
So today, we're basically reading the November newspaper together. We've structured this episode around 4 big themes dominating the headlines: AI in finance, taxation and compliance, accounting standards and governance, macroeconomic and business strategy insights. Before we go deeper, we want to be transparent with our audience. AI helps support research and shape parts of this episode, but all fact-checking, analysis, and final decisions come from us as humans. We're blending the best of both worlds. Let's dive into the first theme, artificial intelligence in finance. We've got 4 stories, each one showing how AI is reshaping assurance, audit expectations, operations, and workforce roles.
AI is moving fast beyond experimentation. It's being integrated into real workflows now. But with that shift comes big questions about governance, reliability, and trust.
Our first piece, a new frontier, CPAs as AI system evaluators. What's this one about?
This AI CPA and CIMA article lays out something fascinating. CPAs are emerging as the professionals best positioned to evaluate AI systems. As companies automate recruiting, forecasting, and operational decisions, they desperately need assurance that the AI is reliable, secure, and free from harmful bias.
Why does this matter so much to finance and accounting professionals?
Because trust is our profession's core value. CPAs already deliver assurance on complex subject matter, SOC reports, controls, processes. So AI audits or AI assurance engagements are becoming the next competitive differentiator. Firms that do this well, they will help clients adopt technology faster and far more safely.
Our next story, BDO's survey on client expectations for AI and audit. What stood out?
A lot. The article, AI and the Audit, Finance Leaders Strongly Support Forward-Thinking Firms, notes that 97% of surveyed finance leaders said they would pay more to work with audit firms that leverage advanced technology.
That's basically everyone.
Exactly. And here's the kicker. 34% said they'd consider switching firms if their auditor isn't using advanced technologies. Meanwhile, 81% say they have more trust in auditors who invest in tech. The key message: technology itself isn't enough. You still need smart, curious professionals who understand how to interpret what the AI produces.
Now, from theory to practice, AI conquering one of accounting's biggest headaches, month-end close.
The ICAW piece, How Blumenwild Solved Month-End Madness with AI, showcases how the company used Stacks.ai to modernize their processes.
What made this implementation so significant?
Their CFO, Dominique Highfield, wanted to scale the business without ballooning the finance team. The goal was efficiency, reducing repetitive work so the team could focus on higher value tasks. And it worked. They even expect year-end audit prep to rely heavily on the system's output.
Our last AI story looks at workforce impact. What did automation and AI and its impact on the future of accounting highlight?
that we're witnessing a transformation. Traditional tasks, data entry, bank reconciliations, are shifting from manual work to RPA automation.
So what happens to the profession?
The author, Adamu Abdullahi Sani, argues that demand for accountants will increase, but only for those who can leverage intelligent systems for analysis, risk management, and strategic insight. AI isn't like RPA. It identifies anomalies, fraud patterns, and enables continuous monitoring instead of sampling. But the skills gap is real and growing. Upskilling is non-negotiable.
All right, let's shift into our second theme, taxation and compliance updates. November was full of IRS guidance, international tax developments, and fallout from the OBBBA.
The IRS spent the month catching up, clarifying deductions, and navigating global negotiations.
The IRS released key guidance on major OBBBA deductions. What did we learn?
The Notice 2025-69 explains how workers should claim the new deductions for qualified tips and qualified overtime compensation from 2025 to 2028. But here's the twist. W-2s and 1099s aren't updated yet, so workers have to manually calculate amounts.
That's going to be really messy.
It is. The notice clarifies that tips deduction max equals $25,000, overtime deduction max equals $12,500, both phase out above $150,000 AGI. The IRS is updating income tax forms now.
Next up, international tax developments and Pillar 2 tensions.
EY's report from November 26 explains that the OBBBA repealed the one-month deferral election. Treasury plans proposed regulations to handle foreign tax allocation. On the global side, G20 leaders reaffirmed their commitment to finding a balanced, practical solution to Pillar 2 disputes.
And multinational groups are facing their first QDMTT filings, right?
Yes, and it's testing data quality and systems readiness across the board.
The government shutdown hit the tax world hard. What did Cherry Beckhardt highlight?
The federal government reopened after a record 43-day shutdown. IRS staffing dropped 28% from January levels. Expect delayed service, slower correspondence, and uncertainty around ACA credit extensions and tax extenders, now pushed into 2026.
How are firms helping clients navigate year-end in this chaos?
BDO's 2025 year-end tax planning guides emphasize actionable strategies to unlock savings and manage total tax liability. With OBBBA changes, economic volatility, and tech disruption, proactive planning is everything.
Let's move into our third theme, accounting standards and governance.
This month brought technical updates, adoption deadlines, and even political threats to standard-setting independence.
Let's start with Deloitte's article on ASU 2025-09. What's the big idea?
FASB wants hedge accounting to more closely reflect real risk management. Two major changes stood out. Forecasted transactions in a group now only require similar, not identical risk exposure, and a new optional model for cash flow hedges tied to choose-your-rate debt, reducing odd accounting results when rates change.
Okay, the next article on independence is alarming. What's happening?
Checkpoint News reported that a proposed budget rider would defund the FASB's oversight body unless they withdraw ASU 2023-09, the new income tax disclosure rule.
That hits at the heart of standard-setting independence.
Exactly. Undermining private sector independence weakens confidence in U.S. GAAP and capital markets. ASU 2023-09 expands tax disclosure requirements to improve transparency.
What should private companies preparing 2025 statements have on their radar?
New adoptions include crypto asset accounting, tax credit structures, joint venture formation, plus major changes for non-public insurance entities by year-end.
All right, let's wrap with the big picture, macroeconomic and strategic insights.
This month showed that while AI dominated spending, economic discipline became unavoidable.
Reuters covered the enormous AI spending by hyperscalers, $350 billion combined.
Yes, and Torsten Slok noted, AI capex now equals 60% of operating cash flow. If revenue doesn't follow, these companies, representing 37% of the S&P 500, could be vulnerable in a downturn.
Let's move on to EY's survey, which showed that CFOs are rethinking their operations.
81% plan moderate to significant operational changes. 86% of tax leaders are prioritizing data and Gen AI adoption. But the biggest barrier? Sustainable data and AI execution.
In the next article, manufacturing teams are under pressure. What's the shift?
Traditional budgeting doesn't work in a world of inflation spikes, tariff swings, and supply chain shocks. Rolling forecasts and scenario modeling must become standard. It transforms finance into a strategic partner, not just a reporter of results.
The economic recap wasn't pretty.
No, the U.S. is living a K-shaped economy. Higher earners are spending. Lower earners are relying on debt. And governance failures made headlines. First Brand's bankruptcy tied to years of alleged deception. BDO hit with a £5.9 million penalty for systemic audit control failures, including falsified evidence. These cases remind us how costly weak internal controls can be.
CJ, that was a comprehensive tour of the month's most important stories.
It was a pleasure working with you on this. And November showed an environment defined by rapid AI integration, regulatory complexity, political tension over standard setting, and an economy demanding agility.
That's it for this episode, the Digital Ledger November update. Thanks for listening.